USD CAD price annual forecast. Battered loonie unlikely to be saved by Fed rate cuts in 2025. The Canadian dollar had a rough run in 2024, falling to nearly 5-year lows. A rapid pace of rate cuts from the Bank of Canada has widened the CAD's rate divergence with the USD. As the Fed ponders slower moves on interest rates, the loonie's rate differential could widen further in 2025. The Canadian dollar, CAD, spent most of 2024 on the ropes, battling into a familiar mid-range before giving up in the last quarter and backsliding into multi-year lows against the US dollar, USD. Rumors of a broad market downturn in the USD were wildly overblown, with the Greenback's Q4 stellar performance further battering the loonie. Canadian dollar in 2024. Bank of Canada aggressive easing weighs USD CAD rose into the 1.4400 handle at the tail end of the year, wrapping up 2024's chart action around 9% higher than it started near 1.3230. The Bank of Canada, BOC, and the Federal Reserve, Fed, both kicked off a rate-cutting cycle in 2024, but the BOC's faster and more furious pace of rate trims sent the loonie tumbling as USD/CAD's rate differential widened through the second half of the year. The BOC's main reference rate peaked at 5.0% in July 2023, and it took the better part of a year for the BOC to finally blink and start delivering rate cuts, opening with a 25 bits per second rate cut in June. The BOC followed up with 4 more cuts through the second half of the year, with the last 2 cuts accelerating to 50 bits per second each. Canada's interest rate now stands at 3.25%, still well above 2022's rock-bottom 0.25% but still far enough below the US Fed funds rate, which only declined from 5.5% to 4.5% over the same period. The Fed held off on rate cuts much longer than the BOC, with the U.S. Central Bank not delivering 2024's first Fed rate cut until September. Global crude oil markets also provided little support for the Canadian dollar in 2024. Despite kicking the year off with one-sided bullish momentum in the first quarter, crude oil prices were steady amid subdued global fossil fuel demand forecasts and as a constant stream of geopolitical concerns sprouting from multiple Middle East conflicts failed to materialize into any actual supply constraints. The Canadian dollar's correlation with crude oil prices has historically been a wobbly inference. However, a steady decline in barrel prices through the midpoint of 2024 crimped bullish potential in the loonie. Canadian Dollar Index, CXY, WTI spot price. Canadian dollar in 2025. Where do we go from here? Technicals drove the fundamentals in the USD/CAD price chart. Although the overall chart is poised nicely for a technical turnaround that should be an appealing play for momentum traders, significant headwinds lie ahead for the loonie. Canadian Prime Minister Justin Trudeau is having difficulty keeping his government on an even keel, culminating in Canadian Finance Minister and Deputy Prime Minister Chrystia Freeland publicly resigning from her federal post the same morning she was supposed to unveil the Canadian government's most recent economic forecast. Political turmoil at both home and abroad will threaten the Canadian dollar heading into 2025. Incoming U.S. President-elect Donald Trump has invested significant time on social media, threatening widespread tariffs on all of the U.S. closest trading partners, including Canada. Canada itself is likely headed for a federal election in 2025. While frontrunner Conservative Party opposition candidate Pierre Poilievre is unlikely to produce or create legislation that will be particularly supportive of the loonie, risk-off conditions could remain elevated on the CAD's outlook in the run-up to an election. The BOC is likewise set to continue easing interest rates through 2025, at least at a faster pace than the Fed is expected to, which will apply pressure on CAD's already rising rate differential. The BOC is under significant pressure to continue lowering interest rates, especially with such a large proportion of the Canadian economy meaningfully absorbed in the country's top-heavy real estate industry and housing investors clamoring for funding relief. The Fed expects to deliver only 2 additional rate cuts in 2025, according to its Summary of Economic Projections, SEP, or dot plot of interest rate expectations. The Fed's latest dot plot, released at its last meeting of 2024 on December 18, shows that the overwhelming majority of Fed policymakers only expect the Fed to deliver 2 more quarter-point rate cuts for all of 2025, far below the 4+ that markets had been predicting as recently as the first week of December. If the BOC continues to slash rates in an effort to bolster its lopsided economy, and the Fed begins to pull the brakes on rate cuts through the next year, the CAD's rate differential could widen significantly, sending the Loonie even lower against the Greenback. Uncertainty is the name of the game to kick off 2025, and tepid risk sentiment heading into the new year could see the Greenback kicking things off with a fresh bout of strength as investors adjust to a new geopolitical paradigm that features risk-off market sentiment more often than not. The Canadian dollar is poised to continue falling in the first quarter. However, CAD investors will be looking to reassess the state of play between the Fed and the BOC heading into the middle quarters of next year. USD/CAD technical analysis, chances of pullback increase. 2024 was a loss-maker for the Canadian dollar. The Loonie shed around 8.5% against the US dollar, sending the USD/CAD chart to 56-month highs and contending with the 1.4400 handle, the pair's highest price since the 2020 pandemic. Excluding the COVID pandemic, USD/CAD hasn't tested the 1.4400 region since January 2016, an 8-year span. With the CAD testing multi-year lows and sending the dollar into the attic, momentum traders will be looking hungrily to collect into bullish CAD positions to force a downside correction, with USD/CAD price action testing into overbought territory. USD/CAD closed higher every month in 2024 except for 3, gaining ground during the other 9. Despite the year's one-sided chart action for USD/CAD, the pair is poised for a technical ceiling as bids struggle to pierce the key barrier decisively. If USD/CAD bears get their wish and a fresh bull run is ignited in the Canadian dollar, short position holders could expect a long, slow grind back to the bottom end of the pair's long-term sideways trend below 1.2500. The signal lines of the Moving Average Convergence Divergence, MACD, have broken into their highest levels since late 2022, and short position seekers should wait for the fast signal line to cross below the slow line before taking a stab at accumulating entries through the first quarter of 2025. USD/CAD Daily Chart. USD/CAD Weekly Chart. USD/CAD Monthly Chart. What key factors drive the Canadian dollar? The key factors driving the Canadian dollar, CAD, are the level of interest rates set by the Bank of Canada, BOC, the price of oil, Canada's largest export, the health of its economy, inflation and the trade balance, which is the difference between the value of Canada's exports versus its imports. Other factors include market sentiment, whether investors are taking on more risky assets, risk on, or seeking safe havens, risk off, with risk on being CAD positive. As its largest trading partner, the health of the U.S. economy is also a key factor influencing the Canadian dollar.
Friends, thanks for watching. Please subscribe my channel for more videos.